Cheng in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, my exclusive interview with Microsoft CEO Satya Nadella. How the pandemic has reshaped what it means to go to work and inspired the company to develop a new employee engagement product. He'll introduce us to Viva, which he says is Microsoft's next big thing. Plus, SPACs still taking flight. Richard Branson's Virgin Group says it'll help 23andMe go public. We're going to hear from Branson himself and 23andMe co-founder and CEO, Anne Wojcicki. And CEOs in space. The founder of Shift4 Payments, Jared Isaacman, has paid an undisclosed amount to command the first all-civilian SpaceX mission. We'll talk to him about how he's preparing for launch and working with Elon Musk. All those stories in a moment, but first, U.S. stocks hitting a record as small caps jumped today. We also saw a slew of tech companies report earnings results. Bloomberg's Kriti Gupta has the full picture. Kriti, walk us through the day.
Well, thanks, Emily. You did see a risk-on day, but really all the action seems to be after the closing bell. You really saw a lot of earnings hit the wire. I do just want to run through them with you. Let's just start off with Snapchat in particular. You are seeing a little bit of a pullback in those shares. Revenue and daily active users both beating estimates. A company saying the revenue will accelerate this year with better than expected forecast for the first quarter. Even with that, they're still expecting unpredictability in 2021. So you did see those shares take a little bit of a pullback. Peloton in that same vein, actually also beating estimates, but saying it can't keep up with the surging demand, and bonus, it warned of a profit squeeze, so investors really not liking that. Activision had a completely other story. You saw them also beat their expectations, not only on their fourth quarter, but also on their 2021 forecasts, tying their strong performance to some of those franchise names like Call of Duty, World of Warcraft, and bonus Candy Crush. Same idea here with Pinterest, also issuing a fairly good forecast for 2021. Strong quarterly sales also beating estimates. They're citing a strong holiday season for that. So another boost there for Pinterest shares. Flip up the boards, though, and we'll look at what happened today intraday. The NASDAQ 100 hitting a record high after, look at this, 3 days of gains. So this would be the fourth straight session in positive territory. Really shows you that's near 5% gains, outperforming even the S&P 500, Emily.
But no gains for GameStop, Kriti, closing at $53 a share. Today, is the rally over?
It kind of seems like it. You did see an 80% drop just this week, an 83.5% drop to be extremely specific. But this doesn't necessarily mean that retail bid is over. It just means it's over potentially just for this stock. You kind of see them shift a little bit of focus to biotech instead. I just want to bring your attention to two stocks that are getting some of that retail love, and you'll see that it's actually gaining by 33% and 43% respectively, the stocks on your screen right now. But look on a weekly basis, those are actually rallying 95% at Tulsa Therapeutics and Anavex Life Sciences 137%. So once again, that retail bid, Emily, it's not gone, it's just gone to a different place in the stock market.
All right, Kriti, thanks so much for that roundup. We will, of course, keep watching GME yet again tomorrow. All right, now to my exclusive conversation with Microsoft CEO Satya Nadella. Like its peers, Microsoft has seen massive growth in cloud demand this past year as more companies than ever have employees working remotely. But it's the employee's experience in a remote environment that's captured Nadella's attention and inspired the company's latest suite of tools in a product called Viva. Microsoft unveiled Viva today, and Nadella brought it to Bloomberg first. Take a listen.
One of the things that really got upended across industries was how do you connect people? So if you have someone on the front lines and then an engineer perhaps working from home, how do you connect? So the team's growth was not just about knowledge workers collaborating, but it was in fact really helping frontline workers and knowledge workers come together to keep business continuity and our society and our economy going. In fact, I shudder to think even what the economic activity would have been, or what the state of services that we all have today would have been, but for the state of today's technologies and that cloud architecture. And Teams clearly has been a massive growth story for us, but it's mostly because of the context of the constraints and how to overcome them.
Now you're on to what you believe will be your next massive line of business, employee experience. Tell us about your newest product, Microsoft Viva?
The thing that the pandemic has put really shine the light on is how important the experience for the employees is, right? I mean, when you're remote in particular, you want to be staying engaged with your business and your company and its sense of purpose and mission. You want to be able to collaborate, like as I said, between the folks on the front lines and the knowledge workers. You want to be able to actually start learning, say, as a new employee, I join, how do I build that knowledge capital by learning from others when I don't have some of the same social structures of the workplace? I need to be able to find them online, learn from them, as well as the learning content needs to be delivered more in the workflow tools I use every day. And lastly, Emily, one of the things that we've also learned a lot about is well-being, because in some sense, some of the practices we had, even the commute practices, were transitions that helped create the clear demarcations between work and life, and those have gone away. And so we've had to introduce even things like virtual commutes and so on in order to help people with transition. So putting these things all together, the employee engagement, learning, collaboration, and well-being, into one experience platform is what Viva is all about. And I think that this represents a new category creation moment. If you look at the journey we've been on with Microsoft 365, we started with individual tools, it became a collaboration suite, and now we think it's going to really get into a new space around employee experience, more holistically thinking about productivity, not just narrowly as output, but all of learning and well-being and collaboration.
So if you spend your whole day in Teams or Word or Outlook, are you putting all of those in one place? Is that what that would mean for the user?
In fact, it's not. It's the exact opposite, which is to say, use the tool that you're using for example, any of your communication needs or deep work needs. And then in the context of that, let us bring in the other people you want to work with, the learning content that's going to make you more productive, the well-being nudges you need in order to make sure that you have the transition. So that's the main purpose of an employee experience, is to not introduce one more new experience that you need to go to, but to bring an experience that you need in the tools that you're using every day as part of your work.
So how big could this be? Could this be your next $10 billion business? What's the total addressable market?
It's in some sense, the way I think about it is, 30 years ago, if you look at it, we introduced, or the world was introduced to ERP, or enterprise resource planning, as a category. It is interesting even to go back in history and see accounting software always was there, and then there was manufacturing software. And what ERP did was to bring together for the first time the accounting and the line of business, in that case manufacturing. So what I believe with EXP is, HR software is there, or HCM or human capital management software is there, but it's more about really tying what happens in the HR or people operations to the entirety of the business, right? Whether it's in finance, whether it's in marketing, whether it's in engineering. And so we think that this can be, like in the years to come, in the decades to come, we'll talk about it like a CRM or an ERP class category.
That was just part of my conversation, my exclusive conversation with Microsoft CEO Satya Nadella. Our full sit-down will run next Wednesday in a special edition of Bloomberg Studio 1.0, rolling out globally on Bloomberg Television. All right, coming up, why Sir Richard Branson gave millions of dollars to 23andMe to help it go public. You're going to hear about the latest SPAC and 23andMe CEO Anne WOJCICKI with Branson next. This is Bloomberg. Well, there have been no shortage of SPACs this year, and the latest involves the genetic testing company 23andMe, set to go public via a merger with billionaire Richard Branson's VG Acquisition Group. I caught up earlier with 23andMe CEO Anne WOJCICKI and Sir Richard Branson to talk about the company's future and its role in reshaping healthcare. Take a listen.
I've never had that glory and that vision of being a public company in my mind. And so a couple of things triggered for me. It's like, one, we're at a point in time where the platform is really ready to take off, like just explode in terms of what we can do on the consumer side as well as on the therapeutic side. And what I've learned, like over the last decade, one of the most important pieces of advice that I've ever gotten and that I continuously give out is who your investors are matters. And so when we thought about how we want to raise capital and whether we want to do an IPO or a SPAC, the idea of partnering with Richard and the Virgin team was just absolutely the slam dunk. And part of it is like the number one core value. The first core value we have is think big. And what we think about with Richard, like think about how big he thinks.
So, Richard, let's talk about that big thinking. Tell us how the deal came together on your end and how personally involved you were.
Well, I've known Anne for many a year and found her delightful and invested in her company right at the beginning, and saw the wonderful team that she'd got around her and the great company that she built and the great brand that she built. I even discovered that I had a great grandmother who was Indian, and that was an absolute delight. And every time I go out in the sun, I don't feel I have to wear as much sun cream as most people, but it's only a small fraction. But anyway, just really impressed with Anne, really impressed with the team, really impressed with what has been achieved, but much more importantly, what can be achieved.
So, Anne, the DNA testing part of the business has been slowing down, but all of that genetic data is so valuable. You're using that for drug development and doubling down there. You've got this new COVID severity test out, which will tell you how vulnerable you are to a severe case of COVID. But hopefully COVID is short-lived. So what do you see as the biggest drivers of long-term growth?
I absolutely believe one day everyone is going to have their sequence. Everyone's going to be genotyped, and you're going to have a different type of healthcare system that helps people understand their fundamental risks, and then you can help manage to prevent those things that are potentially preventable. So I think secondly, we really think about then on the therapeutic side, the ability for us to really pull through all of this data, all of these insights that we have, and make treatments that are founded in genetic discoveries.
Richard, any plans to raise more SPACs or get more personally involved?
It's possible. I mean, we, through getting out there and talking to a lot of companies, there are a lot of very interesting companies that are still private that would like to go to the market, but we haven't decided whether to invest in them through SPACs or invest in them directly or invest in them in a little bit of both. So we're definitely open to the idea, and I'm sure that our team will explore it. And if we can find people like 23andMe that are really doing some positive good in the world, then it's likely that we'll get out and invest in them in some form or another.
You worked with Chamath Palihapitiya on the Virgin deal. Did you see his SPAC king persona coming? I mean, people are calling him SPAC Jesus. I'm not sure whether Jesus would be the right word, but he may be flattered by that. I don't know. He's an extraordinary individual. He's done extraordinary things, and good on him. I mean, he's managed to bring a number of different companies to the market and done some extraordinary things in his lifetime. And he's still, as far as I'm concerned, he's still a very young man. So he's got lots to achieve. My conversation there with 23andMe CEO Anne WOJCICKI and Virgin Group founder Richard Branson. You can catch that full interview online. Okay, coming up, we are talking to the founder of Shift4 Payments, Jared Isaacman, why he's signing up to be the first ever civilian space commander. That is next. This is Bloomberg.
If all goes to plan, he'll command the first all-civilian flight to space. Jared Isaacman, the 37-year-old billionaire, is now partnering with Elon Musk on a coveted mission aboard the SpaceX Dragon. He founded the now ubiquitous point-of-sale payment service Shift4. Then, being a civilian jet pilot himself, went on to launch the largest private fleet of fighter jets to help train the world's air forces. He's now paying an undisclosed sum for 4 seats on the rocket ship. His SpaceX crew will include an ambassador from St. Jude's Hospital in hopes of raising money for children. Isaacman saying, "We do firmly believe that there's going to be a world 50 or 100 years from now where people are going to be jumping in their rockets like the Jetsons, and you're going to have families bouncing around the moon with their kids at a lunar base. If we can accomplish all of that, we sure as heck better tackle childhood cancer along the way." Emily Chang, Bloomberg, San Francisco.
Joining us now for more, Jared Isaacman himself, founder and CEO of Shift4 Payments. Jared, when we had you on the show last year, I had no idea what you were really up to. I mean, how are you feeling? Are you excited? Are you nervous? Are you terrified?
Oh, incredibly excited. And yeah, certainly a lot's gone on since the last time we had a chance to have a conversation. But yeah, I mean, being able to, command the first all civilian mission to space, totally a dream come true, truly a childhood dream come true. And that we're going to be able to do an awful lot of good along the way. I mean, biggest fundraising campaign in the 59-year history of St. Jude Children's Hospital. We've got an incredible crew selection process to make sure we have the right people representing us on this mission, including identifying a great entrepreneur to represent one of the 4 crew members as well. So very exciting time.
I know you're hoping to raise something like $300 million for St. Jude, but are you at all concerned about the risk? I mean, there have to be some butterflies.
No, really, I'm not. First, immensely confident in what Elon and the SpaceX team have delivered. This isn't a new endeavor. I mean, you have to keep in mind the SpaceX team had the foresight 20 years ago to embark on this commercial space initiative. So, I mean, this is the company that brought human spaceflight back to the United States after nearly a decade since the space shuttle has been retired. Those are human-rated spacecraft by NASA, leveraging their 60 years of experience and lessons learned. And now you've got a company that's sending rockets up all the time and landing them on ships in the middle of the ocean. I mean, incredibly impressive. So very confident in the technology, confident in the training, and even just compared to some of my own prior adventures. I was in Antarctica just a year ago. I mean, if you get appendicitis there, that's a pretty big deal. I've flown air shows. I actually think that this is maybe more on the safer side of some of the endeavors I've gone on.
Okay, so what are you doing to prepare for this particular mission? What is the training like? How much time are you spending doing that training?
Yeah, so I mean, right now we're taking everything in milestones. So first step, we got to figure out who the crew is. So just a couple days ago, we kicked off inspiration4.com, which is our mission website. This is where we're inviting the public to, log on, participate, and help us figure out who our crew members are going to be. We have an open seat for someone to make a donation to St. Jude Children's Research Hospital, and they'll get selected at the end of the month and get fitted for a spacesuit. And you got this great entrepreneur selection process as part of our Shift4 Shop commerce platform to identify that next great business leader and elevate them to the stars. And that will be our 4th crew member. So we've got to get through that. We've got to shatter this $200 million record for St. Jude as part of the fundraising. And then we're going to roll right into training. And the idea is it's going to be intense. We are going to draw upon what NASA has developed over the last 60 years. But we're not going to space station. We're not doing any spacewalks. So that actually narrows the curriculum a little bit. It certainly allows me to pay attention to my responsibilities at Shift4 while also preparing for this voyage.
So look, everybody wants to know how much you paid for this flight. You said, you want to break that $200 million record for St. Jude. I mean, is what you paid for that seat somewhere around half that, more, less?
Yeah, so this is a very private transaction between myself individually and SpaceX. But what I can say is, between the $200 million fundraising effort we have to St. Jude, the $100 million that I've already contributed to the fundraising effort for St. Jude, we are going to raise more money and achieve far more good than what the mission in itself is going to cost.
So what's it been like working with Elon Musk? How much interaction have you had with him?
Really not that much because he's a pretty busy guy. He's got a handful of companies right now, and he's changing the world in more than one way at once, which is pretty incredible. I can't say having conversations with him. First, I can't even say we have an aligned vision. I share his vision and the vision he's had for a long time, which is, humankind is just far more interesting when people can go and journey among the stars. I mean, I think we all look at, whether you're a Star Trek fan or a Star Wars fan, you watch that one of those shows or movies and you imagine yourself in one of those spacecraft, right? And that's a world I think a lot of people would like to live in. And, Elon and SpaceX are helping us get there. And Inspiration 4 is one step along the way in that journey. And it allows us to make that kind of progress in space while also tackling some of the issues we have here on Earth. But totally share his vision in that. Very big brain, cerebral person. His mind's definitely moving 1,000,000 miles an hour.
Listening to Elon Musk on Clubhouse over the weekend, he was asked if he'd let his kids go to Mars, and he said, they're not really interested. I'm curious what your family thinks about your mission, and maybe you're not nervous, but are they?
So my wife is not surprised at all. We've been together an awful long time. She used to, sit in the back seat during my early flying lessons, nearly like 20 years ago. She's flown in the fighter jets. She's seen me at air shows. She knows this is part of my DNA to want to go out and seek some of life's, greatest challenges and such. So she wasn't too surprised. And my kids, well, I didn't really kind of fully explain it all to them until recently. They did overhear me talking to my wife, and they tried to break the secret at school, told their teacher that their dad's going to become an astronaut. So we had to squelch that pretty early on because, there's a lot of secrecy, at least initially on this. But I think they're excited. I sure hope someday that this becomes so accessible, so affordable that my kids and other kids can go and go to space. Because right now, to be a NASA astronaut, you have a better chance of getting hit by lightning.
Would you go to or move to Mars if that opportunity happened in our lifetime, or let your kids do that?
Well, I think we got to go one step at a time, right? We got to get this mission right. And I know I've said it before, but it's a huge responsibility because if this goes wrong, it's going to set back the timeline for everyone else. And that timeline can happen really fast. If you look at, Charles Lindbergh's solo flight across the Atlantic, that was one person, one individual, very costly, goes across the Atlantic. 12 years later, Pan Am has transit commercial service for everybody, right? So we got to get this right so everybody else can follow. And then who knows? We'll see what the next mission.
Jared, we'll have to leave it there. We will be following you every step of the way. Jared Isaacson of Shift 4. Coming up, we're going to be talking President Biden under pressure on antitrust. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Technology is increasingly being used in the energy sector. Oil giant Shell boasting hundreds of scientists running R&D projects that seek, for example, to turn natural gas into cleaner fuels. But no amount of technology can help a lackluster quarter. Shell CEO Ben Van Beurden is facing a report, though, that fell short of expectations. Nevertheless, he describes the numbers as resilient and more broadly told my colleagues Matt Miller and Anna Edwards that he expects oil supplies to tighten as the economy recovers. Have a listen.
The year was a very tough year, let's be honest, and a very painful year.
How come earnings missed the street's expectations? Why did these analysts, did they get ahead of their skis here, or did you have some last-minute accounting changes that surprised them?
Well, it's probably a combination of a number of factors, I would say, Matt. But listen, at 0.4 billion versus 0.6, the absolute delta is, of course, very small. Percentage-wise, these numbers are magnified because we're talking about low numbers. And it's very, very difficult with a lot of, indeed, adjustments. And we did have a number of deferred tax asset adjustments to get it completely right. I thought the street did a pretty good job to come as close as $150 million on average from where we were in the quarter. Now, if you look at the entire year, though, I think it's probably more sensible to look at that. that. And again, $34 billion of cash, because that is, after all, the better measure for us to be measured on, is, I think, a credible and a resilience performance. On top of it, Matt, I would say that the countermeasures that we took early in the year, early in 2020, when we said we were going to find $8 to $9 billion of cash to help us in these difficult times, we actually delivered $11.5 billion. So I think we did well in that respect. It didn't help us from taking the painful decision to also reduce our dividend and rebase it. But I think if you look back operationally over the year, I think our staff did remarkably well. I'm very proud of them.
Yeah, let me ask you about how shareholders have received all of the messaging you've given around the dividend and buybacks. You took that historic decision to cut the dividend, the first time in many decades. That was just last year. A couple of quarters later, you raised it modestly, and you also committed to further buybacks. Have investors kept with you along this journey? What's the feedback been from investors?
Well, and as you can imagine, there's a range of reactions. I think nobody, and certainly also not the company, welcomes the need to reset a dividend. But at the same time, it was also a necessary and inevitable thing to do, to not only preserve the financial resilience of the company, but also to preserve the long-term future of the company.
Shell CEO Ben Van Beurden there earlier on Bloomberg Television. We'll have more of Bloomberg Technology right after this quick break. This is Bloomberg. New York City Mayor Bill de Blasio says the city is now in a, quote, wartime dynamic as residents face a shortage in COVID-19 vaccines. This, as the majority of folks are still unclear about when and where they can get their shots across the country. One company trying to solve this problem is Infinitus, an AI company that's automated calls to over 2,500 pharmacies to document vaccine availability across 8 U.S. states. The company also partners with a website called WOJCICKI.com, as in Vaccinate California, to provide the collected information for the public. Joining us now for more, Ankit Jain, founder and CEO of Infinitus, which has just raised $21.4 million in funding. So Ankit, tell us a little bit more about how the platform works.
Well, thanks for having me, Emily. And over the last 2 years, my co-founder Sham and I started Infinitus to automate so many calls that happen in healthcare to exchange information. And what's happened most recently with the Vaccinate CA volunteer project is a great example of that, where there's a lot of people that are looking for certain kinds of information, but the only way to get that information, unfortunately, is the phone. And there was a group of 300 volunteers that were spending all their nights and weekends and weekend days making phone calls to pharmacies around the country, starting in California and now around the country. Someone reached out to us and said, well, you've built this platform to automate phone calls. Can you help this group out? And here we are now, just a couple of weeks later, calling 2,500 pharmacies every single day to find out whether they have the vaccine or not.
Now, based on the information you've gathered so far, what are the biggest challenges? What's happening behind the scenes that we don't know about?
Well, California is a very large state, and every county has different rules, different regulations around who can get the vaccine, what qualifications there are, how you make appointments. And what this project is trying to do is find all of that out so that every person doesn't have to call their local pharmacy, their local hospital, and find out how they can get the vaccine. You just go to one place, VaccinateCA.com, and you're able to look up all this information. So we do the work once. Our digital assistant, Eva, does the work once, and it can be published for everybody to gain from.
So talk to us then about how you intend to expand. I know you're in 8 U.S. states. Do you expect to add more as the vaccine rollout continues and slowly?
Well, the way we've been thinking about this is in every state where there's a mirror project like Vaccinate CA, it's a group of volunteers that get together, create the website, and before they start looking for volunteers to make phone calls now they know about us, and they reach out to us and say, could you also do this for for our state. And our digital assistant, Eva, is just another volunteer. She volunteers her digital time to make those phone calls, and we help scale that up. So as those groups come up, we're helping them expand. And now there's starting to be a couple of groups, one called Find Your Vaccine, that is trying to make that happen on a more nationwide basis.
So, in terms of how to speed things up, do you have any ideas based on the information that you've gathered? What needs to be done to make this better?
Well, there's a lot of people that know a lot more than me or my team at Infinitus about how to speed things up in terms of getting vaccinations out. And I think all the supply chains, all the vaccination sites are doing everything they can to get those vaccinations to people. We're just trying to help people find where they can go get vaccinated based on the calls that Eva makes.
All right, Ankit Jain, Infinitus founder and CEO, thanks so much. Really interesting work and important work that all of you are doing. All right, President Biden has promised to get tough on tech giants whose immense power and profits have come under fire from both sides of the aisle and around the world. Joining us now, Colorado Representative Ken Buck, who's just been appointed as the ranking member of the House Antitrust Subcommittee. He's been a vocal critic of big tech and a proponent of breaking up some of it. Congressman Buck, thank you so much for joining us. You said on Twitter you plan to introduce your own antitrust legislation. What might that involve?
Well, I plan on working very closely with Representative Cicilline from Rhode Island, who is the chair of the Antitrust Subcommittee, and we have talked already about some of the different provisions that we would like to work on together. One of them is the portability of data, and that is that as we take our cell phone numbers from one cell phone company to another, we'd be able to move our data from one search engine to another. So if we are searching on Google, we can take that data, we can move it to another search engine and hopefully create some competition in the marketplace so that Google doesn't have this 94% dominance on desktop searches. There are other issues that I think are really important when we talk about mergers and acquisitions. Facebook largely went unnoticed as it accumulated important business options like Instagram and WhatsApp. I think it's important that we not only look at the price when we consider consumer welfare, but we also look at the other impacts on the marketplace, such as innovation. And I believe that both Google and Facebook, Twitter, Apple, Amazon have all stifled innovation, partly by the mergers and acquisitions that they have engaged in.
Let's talk about Amazon, because the big news this week is Jeff Bezos announcing he's going to step down as CEO. There's speculation he just didn't want to deal with the regulatory scrutiny that was going to come his way. How big a bullet did he dodge? And what is in store for Andy Jassy, who will take his place?
Well, I think all 5 of the monopoly platforms are going to be scrutinized more carefully in the future than they have been in the past. I doubt that Mr. Bezos was worried about the scrutiny that he's going to receive. I think that this is going to take several years. It's going to take a year or more to get legislation through Congress, and then empowering the regulatory agencies, the enforcement agencies, like the Federal Trade Commission and the Antitrust Division at the Department of Justice. They will have to engage in these lawsuits. So some lawsuits have been filed, but any lawsuits involving some of the new statutes won't be filed until after those statutes pass. It will be several years before we really see the impact of what we're talking about doing today.
Attorney General nominee Merrick Garland, what sort of early readings are you get from him and the administration about how tough they're going to be on big tech?
Well, we've certainly heard statements coming out of the administration that they are concerned with these monopolies. They are concerned with the impact on small business, and I think that is refreshing. We really didn't know. The Trump administration had moved. The state attorney generals had moved. We're really waiting to hear, and I expect in the nominee, the attorney general nominees, hearings to confirm his nomination. We will see some of the statements and hear some of the statements that he has to make about this. I anticipate that this Attorney General nominee will be supportive of these actions. And we've certainly heard back channel that the Antitrust Division is moving ahead on all of the actions that were initiated in the Trump administration.
Senator Klobuchar's bill today would make it much harder for big tech companies to buy startups and also easier to bring monopoly cases. Is there anything in there that Republicans that you are ready to support?
I certainly haven't had time to scrutinize Senator Klobuchar's bill. I am encouraged that this effort will not only be bipartisan, but also bicameral. I have not heard from the Republican side in the Senate whether there is really a joint effort in the Senate to do that. I'm assuming that there is, but certainly on the House side, it will be bipartisan. We have a number of measures that we were looking at the end of last year, and the Senator Klobuchar's bill will certainly help us in terms of framing issues that can go over to the Senate and be scrutinized. I'm sure they will already have hearings by the time we get legislation passed in the House.
So, look, I know you have a lot of work to do, but you've already taken a close look at these companies. If you think about Amazon, Apple, Google, Facebook, is there one of those that to you presents the best case, the biggest case for a breakup?
Well, I don't know. The enforcement agencies, the Federal Trade Commission, the Antitrust Division have to decide on what the remedy is. What Congress does is pass laws, and certainly we need more competition in the marketplace for all 5 of the monopoly platforms. I would add Twitter to that scenario also. But Google and Facebook have probably been the biggest actors when it comes to the mergers and acquisitions area, as well as stifling competition in the marketplace. And I think that there are a number of lawsuits pending now with companies that have been squeezed out of the marketplace. There are also a number of state actions that have been brought on behalf of companies and the consumer. And so those 2, I think, are really targets that we will be learning a lot more about and crafting laws that address some of the issues that have been raised by those companies.
All right. Congressman Ken Buck of Colorado will be watching to see the moves you make on big tech. Thanks so much for joining us. All right, coming up, T-Mobile CEO Mike Sievert just got off their earnings call, earnings that exceeded estimates, but some are concerned about the outlook. We'll ask him next. This is Bloomberg. T-Mobile out with earnings results that exceeded analyst expectations. Shares of the company, though, retreating post-market as investors are a little worried about what's ahead for T-Mobile the rest of the year. Joined now by Mike Sievert, the CEO of T-Mobile. So, look, Mike, your subscriber growth continues to beat the industry. I guess the big question is, what levers are you going to continue to pull to keep that up?
You know, there's so many tools in our toolbox, Emily. Thanks for having me on. You know, what we were able to show is that even in this environment with less switching, which is what we feed on at T-Mobile, I mean, taking share from AT&T and Verizon's our business model. Even with less switching going on, we were able to deliver some of our highest performance in our history. In fact, in 2020, 5.5 million postpaid net additions was an all-time company record. And we led the industry in Q4, finishing strong with 2.2 million overall postpaid phones in 2020 and 824,000 in Q4. So it just shows we've got momentum on our side. And that's while carrying around much higher churning Sprint, which is obviously a potential big tailwind as we bring that one from worst to first, just like we did with T-Mobile.
So your competitors are also getting more aggressive. What do you think about AT&T's aggressive iPhone giveaway?
You know, one of the things I said, we just completed our conference call, and one of the things I said is, look, real customer loyalty takes years to build up. And what you need to have is the best value and the best product. That's what T-Mobile has, and it's one of the reasons why I unveiled today that our Magenta T-Mobile brand had the lowest churn in the industry. And so while AT&T's throwing money at customers, I'd be doing the same thing if I saw T-Mobile running ahead on network, threatening to take all their customers. I'd be throwing money at them too. But the result was they had a big miss on EBITDA. And you know, obviously it's a Band-Aid. It's not about real customer loyalty. One thing I will point out, by the way, people keep asking about the competitive dynamic. I just want to say that the AT&T, Verizon, when you look at the sum of them, the net adds were about the same this year as they were last year. And so there isn't anything big going on in the dynamic other than some jockeying between them. The sum total, it's really the same.
All right. You've got an analyst day coming up in March. Do you expect the forecast or outlook to change after that when the auction quiet period is over?
Well, we're certainly anxious for that to be over so we can lay out a multi-year plan, because one of the restrictions is we can't talk about the post-auction dynamics. And so we had to delay that meeting until then. But we're really proud of this guide for 21 that we gave, and it's very bullish, the most bullish one we've ever done. Every year around this time, obviously we put out guidance, and we tend to be a little conservative. But look at that 4 to 4.7 million postpaid phone nets that we put out. If you were to look at what AT&T and Verizon did last year, that'd be double what AT&T did and triple what Verizon did. So I love the fact that people are asking, isn't that a little conservative? It's only double or triple your competitors' prior year performance. It's fantastic.
Now, I'm curious how attractive 5G has been as a feature this year. We've talked about how quickly it's growing. You've always told me it depends on handsets. We need more 5G capable handsets. Where do you think you'll be on 5G subscribers, let's say at the end of 2021?
Well, right now it's in the low double digits, and it's going to several times that. So this is a big year. And, all the major super phones that are high production phones are 5G now. And that just means it's a matter of time. And I do think we're going to see upgrades happening this year. People have been holding on to their phones for a long time. But 5G is a catalyst for a new phone purchase. They're going to have a lot of FOMO when they look at their friends and what they can do with a connection that is 8-10 times faster, and not just here and there, but with T-Mobile across 200 million population by the end of this year for our ultra capacity 5G. You know what Verizon has right now? 2 million. And so it's a huge catalyst year, not just for 5G, but for T-Mobile's lead in 5G.
How about TV and your TV Vision product, the skinny bundle offer? How many customers do you have there? How's that going?
Well, we don't announce customers, but we're really pleased with the experience that they're getting. And remember, we launched this just in time for our pilot on home broadband. And that's really what this is about. It's about being able, when we get into production on home broadband, which is still in pilot phase, to be able to offer the full package. Because one of the things we've learned is that people, in order to consider a change on their home broadband, a lot of them want a turnkey solution with a great TV offer as well. What I said when I announced it hasn't changed. We don't expect TV itself as a standalone to be a major profit center or a major cost center. It's a catalyst for the mobile business, but even more importantly for home broadband, which we haven't commercialized yet, but which we're really excited about.
Now, I know, Mike, you were listening into the interview with Congressman Ken Buck earlier, who's now the ranking member on the House Antitrust Subcommittee. Obviously, there's going to be a lot of scrutiny on big tech in the years to come. You have some experience dealing with regulators and the Sprint deal. If there's one thing that the Biden administration could do that would make a difference for T-Mobile, what would it be?
Well, we're seeing certain things already. You know, one of the things the administration shows a big interest in is connectivity for Americans, and so do we. And I love it when we have a mutual interest with our government. And our Project 10 Million is about connecting kids in every part of this country and making sure no one is left behind, because education's the great leveler. And the administration seems to have similar views, and that's very, very encouraging. Reaching rural houses with broadband itself, very important. And that's what, as I just said, our broadband initiative is all about. You know, we don't have to get a wire to your house. We can transmit it in from a tower, and not a millimeter wave tower like some of our competitors that only goes meters. Ours goes miles. And so we can reach houses with broadband that others can't. And that seems to be important to the administration. Treating everybody fairly on the internet is something that we're hearing. So we're very encouraged.
So when it comes to your focus on subscribers for the next year, where are you going to be putting most of your energy?
One of the things on consumer you're going to see from us is a bigger focus on small town rural. A lot of our success in the past, just based on where we came from, has been in the big urbans. But did you know our market share is less than half our national average in the 50 million homes that represent small town and rural? This is a big part of the country. And our market share is less than half our national average. So huge potential for us, especially as we emerge in those areas as the network leader. That's not all going to happen this year, but it's certainly a focus. And the second is business. We've always competed on price in business. Now we're competing on quality, and that's a big difference.
All right, Mike Sievert, CEO of T-Mobile. Always good to have you here, Mike. Thanks so much for stopping by. And getting to more of the tech results we've been following in the last hour, Peloton getting our attention. The company has its first $1 billion quarter due to stay-at-home demand. Digital subscriptions up 472%. Connected fitness subscriptions up 134%. Still, the at-home fitness provider painting a picture of supply constraints and delays, which led to shares dropping after hours. CEO John Foley says Peloton is making more bikes, though, monthly than in all of 2018, and they believe the cheaper treadmill they have to come is a rocket ship. That does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Daybreak Asia coming up next. This is Bloomberg.